Today in crypto, Bitcoin simply cannot be stopped as institutional adoption heats up big time, with Mastercard finally having to bend the knee. PayPal is getting closer to launching its crypto service, and big banks are seeing big profits from offering crypto services to their customers. Meanwhile, Bitcoin is like a ticking time bomb. Tick, 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 tick. It could explode at any minute. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. So let's take a peek at the markets to get started off with. Bitcoin is still moving sideways with the Bollinger Bands now incredibly tight. And the longer that we have this Bollinger Band squeeze, the higher the probability of a strong breakout becomes. And it has been squeezing up for quite some time now. There are some people out there who are saying this is just like late 2018. We're going to get a 50% dump coming in really soon. Personally, I do not think that is the case. Yes, the Bollinger Bands are tight. Yes, we could go back down. Maybe we're going to test the 200-day moving average before we bounce up farther. Maybe we go lower than that if things are really bad. But what happened in 2018 was due to a lot of factors, from extreme pessimism and fear in the market to the hash war between Bitcoin Cash and Bitcoin Satoshi Vision, the hangover from the ICO boom, which turned into an ICO bust after that. The market is way, way different structurally right now. We are trending up. We are not trending down. Adoption, it is up. Institutional adoption is up. Fiat on-ramps, they're on the up. An incredible number of useful products are actually being delivered by cryptocurrency companies right now. And the DeFi narrative, it is really, really starting to take shape. All of this is working in the favor of the prices moving up, not down when we do get a breakout. But this is Bitcoin after all, so anything could happen. So make sure you stay frosty out there, everyone. But my personal bias does remain on the bullish side of the equation. And while we're still under the 50-day moving average, which is short term, not super bullish, I do maintain my bullish bias overall, so long as we maintain above that 200-day moving average. Look, at this stage, Bitcoin is big time overdue for some serious volatility. Remember, I still believe that Bitcoin is going to $100,000 and beyond in the coming cycle. Also, Ethereum is looking ready to make a breakout move from the ascending triangle that has been in for a long time now, or at least a test of that top area of resistance. Ethereum has also been maintaining above the 50-day moving average, showing a strength in price support for Ethereum. Now, seeing the two big boys pump as profits start to flow back into them from altcoins, that would not surprise me at all. Which, by the way, would be even more likely if we are currently at where I believe that we are at on the Wall Street cheat sheet, which I believe is in the disbelief phase. Now, a lot of people still think that this rally is just going to fail like all of the other rallies. And my honest feeling is that, yeah, we do need a good, big old-fashioned pullback on the altcoin market right now. And then Ultra Moon time, baby. But if Bitcoin breaks out, then you know what? Alts are probably going to get hit in the short term, which really supports the thesis of a big pullback coming in on alts. Personally, I feel like it has just been way, way too bullish recently for altcoins based on the greed sentiment alone. People are just doing flips overnight for 2-3x. It's crazy, man. What we are seeing right now in the market, this is not normal, and things can change very, very, very fast, so keep that in mind. Yes, we could run further before that happens, but a correction will come. You have to keep in mind, too, there's just a flood of new projects coming in, and a lot of these are just going to be hyped up for a few minutes, and then everybody sells them off and moves on to the next one, looking for the next gains train to hop onto. You have to realize, too, that all these crazy gains, all this pumping in the market right now, it's happening with no media hype at all. There's really no normies piling into the market. This run, it is only getting started, but pullbacks are going to happen, and some of them will be brutal. They'll be 20, 30, 40, 50% pullbacks. But these market movements, they're necessary, they're normal, and they're healthy, and they provide an excellent chance to buy the dip on something you think you might have missed out on. A big thank you to Anyswap for sponsoring today's episode. Anyswap is a new decentralized exchange being launched by the Fusion team. Their cross-chain protocol will allow for swaps between Fusion, Bitcoin, Ethereum, Litecoin, XRP, and really any coin on any blockchain, which is incredibly powerful. Now, this is being made possible thanks to Fusion's decentralized control right management system, which has already been successfully tested with Bitcoin and with Ethereum. They are also partnered with Chainlink to bring data from across the blockchain world into the Anyswap app. The first pair, AnyFusion, is live now with more pairs being rolled out over the next couple of weeks. There is a link down below where you can go ahead and give the Anyswap app a try. Okay, now let's talk about DeFi a little bit more here. So the total value locked in decentralized finance is quickly closing in on the $3 billion mark. It seems like just the other day we hit $2 billion. Oh, this way, we did hit $2 billion the other day. It's crazy. This is absolutely exponential growth. Now, another key metric in DeFi is this one. Ethereum has continued to opening up its lead over Bitcoin in terms of daily settlement value. A gap of $500 million to be exact right now, with Ethereum settling $2.5 billion a day and Bitcoin only doing around $2 billion. Now, this can be attributed almost as precisely to the unstoppable rise of DeFi and particularly of the use of stablecoins within DeFi. Another $3.8 billion was added to the total stablecoin market cap in Q2 of this year, beating the previous high of $2.4 billion in Q1 of this year. Unfortunately, Tether does remain the dominant stablecoin, but USDC is rising quickly up to the number 2 spot, and there are quite a few others coming up behind USDC, which is a good thing. Now, on to the first big story of the day. Another one-time Bitcoin hater has been forced to bend the knee. Mastercard has announced that it will allow WireX to issue cards via its platform. While WireX is the first partner, it appears that Mastercard is indeed targeting more partnerships within the cryptocurrency industry, literally issuing an open invitation to cryptocurrency companies who wish to join Mastercard's Accelerate program. Now, this is crazy because it comes just 2 years after Mastercard banned users from purchasing cryptocurrency or funding exchange accounts using Mastercards, which is crazy, man. As the old saying goes, if you can't beat them, join them. And this makes sense to me, to be honest. Mastercard has seen the rising popularity of crypto debit cards, realizes that it's missing out on a big rising segment of the industry, and with the downfall of Wirecard, a pretty big opportunity opened up itself for competition. And of course, Mastercard is already a step behind Visa in this regard, as Wirecard is issuing out Visa enabled cards, but still, this announcement from Mastercard just serves as yet another confirmation of the trend of the acceptance of Bitcoin at the highest institutional levels and of how just totally unstoppable the success of crypto assets is going to be. And when the monetary opportunity is so lucrative, it is unsurprising that so many big players are continually announcing their crypto plays. Take this story about Julius Baer. Julius Baer, in case you don't know, is a top 5 Swiss bank. It saw its profit climb by 34% in the first half of 2020. And what did they do in the first half of 2020 that might have caused such a thing? Well, that's the same period which it began offering digital assets like Bitcoin to its clients. What do you want to bet? That the success of Julius Baer is going to lure in even more banks to the crypto game? And by the way, this is in the same year that we saw more than 40 German banks applying for crypto licenses, thanks to the new laws there, and in which we saw JP Morgan finally cave and start offering banking services to Coinbase and Gemini. And then this other story from just today, British banking giant Standard Chartered is building a crypto custody solution for institutional investors. It happens slowly at first, and then all at once everybody just comes to the party. The pressure building right now for any company which is not making some kind of crypto play is very, very big. This is going to be the fastest growing asset class of the next decade. Early adopters to the party, they're the ones who are going to reap the greatest benefits and get the biggest rewards for their efforts and their risk. And perhaps no story is more representative of this than the PayPal story, which, by the way, we have got another big update on the ongoing PayPal saga, as they would just say it already, PayPal. Come on, man. Anyway, according to sources, it seems that PayPal has selected Paxos to handle the new PayPal services supply of digital assets. Now, we still do not have any word on what assets we listed and on what the PayPal service will look like or when it's coming or really anything. They've been keeping very, very quiet about it, but it is coming. And by the way, Paxos has really been making some big moves recently. This news about PayPal, of course, is absolutely massive, but it also just is an addition to their collaboration with Revolut US, which is the crypto-friendly mobile banking app that just debuted in the USA, which is already popular in Europe. The pressure for PayPal to remain relevant is definitely real, since other publicly traded payments providers like Square and their Cash App or Robinhood, they already offer cryptocurrency exposure. And Coinbase, they're doing a public listing soon. Suddenly you realize that PayPal without crypto starts to give me those MySpace vibes, man. Ugh. So if PayPal pulls this off correctly, it will be the biggest crypto provider in terms of its 325 million strong user base. Obviously, they have to convince those people to actually want to buy crypto, but it is a big play, and it's the only thing I think that's going to keep them relevant. So exciting. Anyway, your question for today. Do you think that the altcoin market is due for a big correction soon? Has it become just a little bit too silly out there? Or does the engine have a lot of fuel left in it before we need to pull over and take a bit of a rest stop? Let me know down below in the comment section. I hope you're having a freaking awesome day wherever you are and whatever you are doing out there in the wild, wild world, man. Long live the blockchain, and peace out till next time.